Good afternoon, everybody. Thanks very much for joining us. For those who don't know me, my name's Richard Betts. I'm co-founder and head of content at Real Asset Media. We run around 40 or 50 of these kinds of events, and we like to be collaborative in terms of the industry. So this is an initiative here at MIPIM, similar to the one that we have at Expo Real, called the International Investors Lounge, where we focus on key topics and just look at, I suppose, what the investment challenge is and particularly where the investment opportunities are, looking both at locations like this one on Germany, but also on sector ones like the one we just had on data centers, for example, and we're covering logistics tomorrow. If you're joining us on the live stream, thank you very much for joining. And also if you're joining us on demand, thank you as well. Let's start with brief introductions. So Tobias, let's start with you, then we'll work our way down and then we'll drill into the questions. And if anybody's got any things that they want to ask, please do. And we'll try to pick up those as best as we can. Tobias, over to you.
Thank you. Good afternoon. I'm Tobias Schultheiß. I'm founder and owner of Blackbird Real Estate, which is a capital markets advisory and also a consultant for tenant representation in Germany. We're based in Frankfurt. We are the German partner of NAI Global and as such the international desk for them. I'm in business for 30 years with 2 people. That's basically it.
Great. Johannes.
Yeah, hello. Welcome. My name is Johannes Lichtenthaler. I'm responsible for service development at the largest project management and consultancy firm in Germany, which is Drees and Sommer. And we started not only taking care of the consulting and the project management issues, but also taking care of the owner's perspective and managing projects in global and total from a 360-degree perspective.
Great. Well,
hope you hear me. My name is Wulf Meinel. I run a company called StoneVest based in Zurich, and we focus on German industrial assets. Thank you.
Great. I'm going to start with you, Wulf, actually on this. And just in terms of this, today it's a 30-minute look at what's happening in Germany, where the investment opportunities are. And we're going to split that looking at, I suppose, where we are at the moment, the market mood, give you some facts and data on the market, and then also our kind of best view on what that means in terms of investment running forward. So Wulf, let's start with you just in terms of your assessment of where we are in the market at the moment and the sentiment.
Sentiment means mood, and the mood in Germany is bad. But it's not bad enough to lead to direct change. And this is also because relatively and always compared to other major economies, Germany is not really in such a bad shape and has potential going forward.
Great. Feel free to pick up that point in terms of sentiment. It'd be interesting because you're coming from different perspectives. It would be good to get everybody. So, Johannes, I suppose, how do you see sentiment at the moment? What's your take on it?
Yeah, the mood in Germany is always a little bit worse compared to other countries in Europe. But still, we see a situation that the construction costs, especially, are too high for projects to be in a good way, in an economic way, to be built. So the whole market came to a stop, more or less, and we are all waiting that the market gets into shape again.
Okay, good. And Tobias, maybe pick that up, but also, you know, we've all seen a number of different cycles here. So how do you see that? I mean, from my perspective, I'm often seeing international markets be more positive about Germany as the cycle changes. So you've seen a number of cycles. So where do you think we are in terms of that?
It looks as since last week we are at the beginning of a new cycle, a downward cycle, unfortunately. I have to agree to what Wulf and Johannes said regarding the mood. We in Germany, we always see the glass as half empty, while I'm a lot in the United States doing business there, and they see the same glass, but it's half full. We are in the crisis. Okay, that's bad. The German tends to just put his head in the sand, while the Americans say, same situation, shame, there's a crisis. But a crisis also means there must be opportunities. Go find them.
Okay, good. Interesting to get your point, Johannes, on that.
Yeah, in addition to the glass half empty, I would add on that the Germans are actually over-engineering everything.
Yeah.
They're famous for that, but this is not helping us in the situation right now, because we should see it more like other countries in Europe, or maybe the Scandinavian countries, the Dutch area, where they see more pragmatic ways of overcoming the current situation, and actually having a simpler and faster and easier way to build new real estate.
Yeah, and see, I was in Las Vegas 3 weeks ago at a convention of real estate people, and I have been asked several times, how do I invest in Germany? Can I, as a US citizen or a corporate, can I buy properties as an investment in Germany? There's an increasing amount of interest from US money coming to diversify into not only Germany, but Europe. And they are very excited about Germany. They see this is the third largest economy in the world. It may struggle somewhat these days, but they don't see it as negative as we do.
You're totally right, Tobias. It's always the look from outside and look from inside, which are not the same. And typically, the grass of your neighbor is greener than your own grass. So, but nevertheless, we have headwinds facing the German economy. We have an aging population. By 2035, every fourth inhabitant in Germany will be over 67 years old. We have an infrastructure backlog, which is quantified to be around 1 year's national budget, around 500 billion euros. We have an immigration which in many aspects is still not fully controlled. And we have some misspending of our social security system that requires correction. But that's easy to quote. Do we have measures against it? Yes, we do. We have some. You know, the German government just announced a 500 billion credit program to tackle the infrastructure backlog, and that is starting carefully to show some success. Another aspect which I think we should not leave unmentioned is that Germany might, in the context of its direct European neighbors, start to realize it has to grow up. Oh, we have two people standing up now, that's very interesting. Germany has to realize that it has to become a mature member of the European Union and not just a beneficiary. And this will lead to not only infrastructure investment, but very likely also have to enhance and push Germany to invest into its defense schemes.
And what are we seeing in terms of capital flows? Because obviously there's interest in terms of what German capital is doing elsewhere, both within Germany and outside. But who are we seeing? I guess where are the denominations? Are we seeing more North American capital? Are we seeing capital for core? Is it for value add? So who are the investment capital that is looking at the moment?
I think for the moment, capital from outside Germany might have it easier because they're used to invest money into assets that are more the Anglo-Saxon way, in the way they were built. In Germany, the buildings are mostly built in concrete with stone, with a very high quality that you might not even really need, and when you really need a lot of housing to be built, or less construction costs. So therefore, if you have the same level of quality in Anglo-Saxon world, and you bring that money into Germany, you will find very good products if they are at a lower quality level compared to what the Germans are used to. And the German capital is used to a higher level, and for them to decrease that and still having the same amount of money being paid for the same asset, this is something that has to where the market has to meet in a certain stage, and this is something that for the next couple of months and years, eventually international capital will have a good chance to invest in Germany.
And feel free to pick that up. I mean, if we look at geopolitics, obviously Europe has taken a hit in terms of perceived risk because of the war in Ukraine. But if we now look at what's happening in the Gulf, for example, and what would have been perceived to be a very solid and safe investment, maybe that is also actually going to support Germany as a safe haven again, and maybe make it more investable going forward. I don't know what your take on that is.
I'd be happy if I could just say you're right, but I don't know because it's too soon. We don't know how long that war will last. Hopefully only a couple of weeks, but we had the same hope with Ukraine. Now we're in year number 4. So actually, I just don't know. Regarding capital flows, I mentioned that I see an increasing amount of US money that is interested in coming to Europe, not only Germany, but to Europe. And one investor group is still very active investing in Germany, and that's French SCPIs. That's kind of the French version of an open-ended real estate fund. They have to go abroad because they promised their investors rather high yields, and therefore they need to go outside of France where they get these higher yields. They found a lot of these properties in Ireland, and they are very active investors in Germany. The good thing is they don't really care about, well, they do care about location and quality of the building, but they accept weaker locations and weaker buildings in order to get higher yields.
I tend to agree, Tobias, but actually I see this also as a missed opportunity. Non-domestic money looking into Germany has for the past 25 years been oriented towards opportunistic type of returns. Domestic money was left to cover the core and core plus segment. So that's been completely separated markets for a reason I do not really get. Why? Is it really such that non-German money, meaning US, maybe Asian money, maybe Arabic money or Near Eastern money, perceives investment in real estate investments into Germany only to be justifiable if there's an opportunistic type of return? Apparently that is the case. And that, I think, especially given the geopolitical context which we've just briefly hinted to, should be reconsidered. Because after all, as we made it also clear in our initial statements, the German economy is a very diversified, stable economy, stable political system. So why do core type of return investors shed away from Germany and tend to stick to their domestic markets? I really don't know.
Feel free to pick that up, anybody. I wanted to also drill down a little bit into, I guess, the sectors. Let's look at some of the facts and figures and where the opportunities are. So, interested to get your perception on any of those, Johannes. How do you see the various sectors? What's your view on them in terms of, I guess, their attractiveness at the moment? Where are you looking?
It's again the game of offer and supply, because we see that we have a lack of housing in Germany, so that makes it a very good market for the future. But nevertheless, we have to find ways to decrease the construction costs, because that is a decrease of construction costs by 30% would make most of the projects economically feasible again. And therefore, we have to find ways to do that. There are a lot of initiatives, but they're only small steps in the big game. So we have to find ideas how to manage that in a better way. And that is exactly where we as Drees and Sommer take care of this kind of issue to offer the market solutions how to get this wheel running again. By having then reduced construction costs, by having more module and prefabricated systems that you build. And this is not only for the asset class of housing, but for all other asset classes too. But this is the main motor, I think, for the next couple of years will be housing in Germany.
Okay, good. Tobias, interested to get your views also on areas like office, for example, and what you're seeing.
Well, when we don't think about investment in office for a couple of minutes or seconds, when you look at the letting market of the top 7 cities in Germany, you have the situation that there's this fight for quality. that when you're in the CBD of Frankfurt, Munich, Stuttgart, whatever the top 7 city is, there's a high demand for high quality Class A office buildings where you have increasing rents and decreasing vacancy. But as soon as you leave CBD areas in these cities, there's almost zero demand for even for good quality properties. Same situation I see in the office investment sector, that there is demand for high quality office buildings. That's boring German money that typically buys this. And there's a growing amount of value add investors that say, we think that office is coming back, and we now buy value add office buildings in good locations of these top 7 cities. But it's my take that the gap between what the sellers ask and what the value add investors bid, that this gap is in often cases still too big.
Yeah, the gap is big because greed means rationality, and that I agree to. I urge you, just use AI and just ask AI. I have 100 million to spend in Germany, commercial real estate. Where should I spend it? You can try. I did it. It's pretty clear. It's minimum 50% in the industrial space. It's 25% in offices, what Tobias just said. But offices CBD with turnaround potential. Why? Because COVID is over. So people are forced to go back to the office, to their offices. And working in an office means being communicative, being efficient. So employers are now forcing their workforce to be back in the offices. And if investors in this world do not proactively react, they will be running behind the curve. So it is key to look for classy offices, now buy them cheap and reposition them. It is the best investment story to invest into the German Mittelstand and the German industrial space, because just take a few figures. The combined economic workforce of France and Italy is what? It's still smaller than the German one. The German Mittelstand companies employ over 30 million people by inhabitants of 82 million. It's easy to understand, and it's a very solid sector. So in these two segments, if I ask AI, but I also ask my own experience, for some strange reason it comes to the same result.
So maybe it's an advanced training model that you've actually been training there, Wulf. I don't know. It would be good just briefly to drill down a little bit because of the focus on industrial and logistics. So what's driving that, Wulf? What's driving the opportunities in Germany?
Well, in short, the fact that nearly 80% of the mission-critical production assets is owner-occupied. And that fully contrasts to how the situation is in the US and the UK. And why is that so? Well, because these two markets, in the US and the UK, have mature investment markets for real estate investment vehicles focused on these two asset classes. That is still not the case in Germany, despite the fact that you can earn very stable, solid returns and generate dividendable income. Therefore, this is still a niche market which has a chance for growth. The logistics market has seen a significant uplift over the past 3-4 years, especially post-COVID, and that appears to be still strong enough with market fundamentals functioning where demand outgrows supply. Consequently, there will be some rental growth. But especially it is what Johannes just said. We have a lack of product because we simply have to live with the fact that obtaining building permits is quite an onerous job in Germany, point one. And point two, construction costs in Germany are still so high that ultimately the completed product is far more expensive than the investment world will pay for it. So it will be still quite exceptional to create a newly completed logistics asset fully viable for the investment market. Office market we just discussed, and then comes the residential market. Well, we have a tremendous shortage of apartments which we need to serve the population living in Germany for residential. The figure is around 400,000 units needed per year, with an output of 120,000. That depends a bit. How to bridge that? Well, one argument is we need it, but we need it on an affordable base. And then we're again at your point. Yes. Affordability requires land costs to go down, because construction costs do not go down. They simply have not gone down. Irrespective of COVID, they have not decreased.
Even construction costs have doubled in the last 15 years. So, as I mentioned before, by decreasing the construction cost by 30%, which is possible by just looking in our neighboring countries like Denmark or like in the Netherlands, then we would be able to have a big portion already done. And then if it comes to land costs, to all the other initiatives and decreasing the amount of time it takes to get a building permit and so on, then we will have a sum of issues that will make building or construction feasible again.
And if we've got a very tight development market in general, because obviously there's regulation and those elements as well and planning, but if we're actually not doing a great deal of development at the moment in Germany, surely that's going to have a knock-on effect in terms of less vacancy and therefore potentially higher rents.
Yes. Short answer, yes. And low production amounts with growing demand, meaning supply shortage versus demand increase, means increase in prices. But careful, affordability, which appears to be a theme in the US, should also be and is effectively quite a topic also in the German real estate market. Logistics has been the sweet spot and the many investors, especially globally, looking into Germany. And they all have been betting on significantly increasing rents. But if you then look at the balance sheets of the operators running logistics platforms, you will soon discover that their ability to afford significantly higher rents is limited. It's simply limited. It doesn't fly. So the bottleneck cannot be overcome with rising rents. The bottleneck can only be overcome if we reduce the bureaucracy burden we have in Germany, which is outrageous. Yeah. So I think we're even worse than the Italians are, and that will mean something to me. Yeah?
I sat together with a developer yesterday who told me, he showed me pictures of his new headquarters of his company, and he said it took him 10 years to get the building permit.
Yeah.
In Singapore, I heard this last year at MIPIM, in Singapore it's 30 days from day where you apply to having the permit.
And this is exactly what I mean, that we need to look just at our neighboring countries. Yeah. There are some in Denmark or in the Netherlands, they are better in also in that case of, and so the goal is so near.
Yeah.
To have actually the whole real estate market coming back again. And what we see until then is that a lot of project developers or other market participants go down because they don't have the time to wait, and the financing money is called back. And so then we can try and help them to finalize the buildings anyway and be the finalization partner, either for the bank, for the capital, or for the owner, for the client from the very beginning, so that we get some income, because buildings who are not ready don't generate income.
Just briefly as well, because we've only got a few minutes left. So what about alternatives? We just did a session on data centers. You mentioned aging. Does that mean senior living, those kinds of elements, healthcare, things that would have been perceived as, I guess, alternatives, but are now beginning to be much higher in terms of investor views. What about that for Germany?
Data center is a great thing. We have a strong track record in that instance, and yeah, a lot of money is now going into that because Germany has to come back with a lot of additional market here.
So following up what Johannes said about reducing building costs, in Holland you don't build cellars, and that saves a lot of money. But when you don't build cellars, where do you store your stuff? And that's one alternative investment is self-storage, which is in the US and in the Nordic countries, it's an established asset, real estate asset. But here in Germany, it's a rather young thing. And yeah, I agree with data centers. That's a niche investment, but a growing niche. What I always liked, and you remember when we started the International Investors Lounge, I still like business park-like properties in small cities of Germany because we have more than 400 cities in Germany with more than 25,000 inhabitants. And each of these cities have like commercial areas, and then when you buy a business park-like building there with a mixed use of office and warehouse, you cannot lose. You may not have yield compression as you have in the top cities, but you do have stable income. I used to own a couple of these buildings, and especially over the pandemic, I lost exactly 0 cent in rent because that's owner-occupiers, that's entrepreneurs. And before they stop paying my rent, they rather don't go to holiday or don't go for dinner with the family. So that's a super stable investment. You have yields are somewhere around 7 to 9%, depending on where you buy. And that's my take, my recommendation.
Alternative investments, in addition to classical real estate investments, infrastructure. Definitely infrastructure investments, admittedly less related to hard assets, but more to the infrastructure project. Within the real estate world, I do think that food-anchored retail is a sector that is still a little bit undervalued. And it was the formula post-COVID to say, I need beds and I need sheds. So I need to invest in housing, and then people just, order online. And the online investment is probably already peaked, or at least it won't grow at the level one did expect over the last years. Whereas to beds and shed, what belongs to that? Food. So people need to be fed. And that is in the food-anchored retail stores, which quite often, with a little bit of polishing up, see stable returns.
Great. There's only 1 minute left, so let's just pick on, if we had to choose one for everybody watching, what should it be? What should they look to invest in? Where do you think you're going to get the best risk-related returns, I suppose, in Germany if you wanted to invest money today?
Yeah, from my point of view, it is housing, and infrastructure is difficult because there's no real market existing yet, but this might be changing. To clean up the market, to organize the distressed assets in a proper way so that we can start from a new scratch. That should be also a focus for the next couple of months.
Great.
I already gave the answer. It's business park-like properties in C or D cities.
Okay, good. Wolfie, are you agreeing entirely with AI? Are you?
You'd probably be amazed, Richard. Mission-critical production assets brought together into a portfolio with different single-tenanted buildings, long-term leases, diversified industries, most stable place, most safe place, with tremendous return.
Great, thank you very much. The session continues tomorrow in the program. We've got we'll be looking at real estate trends, and then in the afternoon we've got a session looking at logistics. So fascinating to see some of that. Thanks very much for sharing your insights. Thanks very much for joining us here, and thank you very much for joining us online. Thanks very much, everybody.